everyone, and welcome to Digital Banking Work in Progress, where I talk about all things related to digital banking with some people who are doing amazing and often groundbreaking things in the space of financial technology. I'm Seshika, and I've been in engineering in the financial services, financial technology space for the last 20 years. And presently, I'm Vice President of Banking and Financial Services at WSO2. And today, I'm very excited to be chatting with Jason Maude from Starling Bank. And we are going to dig into digital customer experiences and the amazing things that are happening in that area. So hi, Jason. Good morning.
Hi.
And
good morning.
I'll let you introduce yourself.
Yes. My name is Jason Maude, and I am the Chief Technology Advocate for Starling Bank. So Starling Bank is a digital bank in the UK, one of the UK's first digital-only banks. So we only deliver services through our mobile banking apps and through our web portal. We have no branches to speak of, no physical infrastructure outside of our offices. Customers are interacting with us entirely digitally. We were founded in 2014, launched in 2017, so launched about 5 years ago or so, and we at the moment have millions of customers, billions of pounds on deposit. We're up to about 3 million customers or so by now. And we've got product offerings in the personal current account space, which is where we started, but also business current accounts, other types of accounts as well. We have also a B2B offering where we offer the ability to connect to the bank to make payments, so payments as a service, as we refer to it, and we are moving into selling our banking platform through Engine, which is Engine by Starling, which is our another company that we have founded in order to take this all this great technology we have created and allow others to use it to build banking platforms on themselves.
Excellent. So Jason, I think something less known by many people about you is that you used to do a little bit of stand-up comedy back in your university days.
Indeed, yes.
Do you still do that?
Sadly, no. I have no stand-up comedy or debating, which was the other thing I did back in my university days. But I do still get to use the same sort of skills to do public speaking and so on. Albeit you can still find images of and video of me much younger doing stand-up comedy on YouTube. I do not vouch for the quality in any way.
Oh, well. So talking about that, I think when you joined Starling, that was, I think, back in 2016, you joined as a developer. And that was quite a turbulent time at Starling, wasn't it? Because the previous year, I think several members of the senior leadership had left, including the CTO. And then the succeeding CTO left the year that you joined. So, and Anne Bowden, the founding CEO, in her book says that period was like a near-death experience for Starling. And that's the precise time that you decided to join the bank.
Yeah.
So I'm really curious to know what were you thinking? What was your professional journey?
What was I thinking?
What were you thinking?
Indeed. So I was the sort of initial proximate reason I joined Starling was that I was not feeling satisfied at my the job I was working on at the time. So I wanted to leave, and a friend of mine who had worked at that job with me a while back had left and had joined this thing called Starling, and he was one of the people who had been brought on in the wake of all of this turbulence and so on, and we reached out to each other simultaneously via different channels. Him asking me, are you interested in taking a job, and me asking him, could you give me a job? Is this something of interest? So we reached out to each other. Then we met up and we were, discussing things and so on. And I was really, and at the time I didn't know about all of the turbulence, but it was something that I think I expected to be there anyway, because this is a startup, and startups always go through periods of turbulence, right? The number of startups that don't survive their first few years is very high. There is a very high drop-off rate where something, you try something out and it doesn't quite work, either commercially or you can't get the people to agree on the vision and go forward with it and so on. So I was very taken with the idea of building a bank from the ground up, from scratch. And a bank that was really focused on trying to improve the customer experience. That was definitely something that I was taken by, the sort of challenge to the old, orthodoxy way of doing things from the traditional high street banks, who sort of pay lip service to customers, but are so big that pissing off one customer doesn't really matter to them. And, they can just carry on regardless. And I thought, well, some challenge to that would be definitely a good thing.
Yeah. So two good reasons then. One is that you didn't quite know about the turbulence too much. And more importantly, that, you were excited about, the brave things they were trying to do at the time. Yeah,
absolutely. And I think that the turbulence is something that, as I say, is to be expected, really. It's, there's a lot of, especially when you have a lot of people who have, startups require people with vision, right? They require people with it's not just people who are good at running existing things. It's people who have a new direction that they want to take things in and point in that direction. And obviously, inevitably, you'll get people coming in who are pointing in somewhat similar directions, but not exactly the same. And when the rubber hits the road, when the crunch time comes, they're not going to be able to agree because they have different visions of where it should go.
Yeah, and I think you said it quite well, that when Starling Bank started this journey, one of the main things that they want, one of the main goals were to provide, much better customer experience than what was available at the time. So I think back then, when Starling was launched, and it was I would say it was one of the first few challenger banks around. I think that the difference in the customer experience between the challengers and the incumbents were quite, it was quite visible. But now in 2022, post-pandemic as well, we have seen many banks, many incumbents also upping the ante and really, really coming up with some really cool stuff in terms of customer experience. And then there are many other banks that have been, of course, forced to improve or progress their, digital customer experience because of the pandemic and because that requirement came during that time. But if you really look at the average incumbent bank right now, I would say the customer experience that is provided by the average incumbent bank still leaves much to be desired. So with that kind of, that kind of space or that kind of background, what do you think? And this is a loaded question, it's a two-part question. So remember both parts. What do you think such banks should stop doing? And what should they start doing in order to provide the type of customer experience that customers are actually expecting?
So let's start with what they should stop doing. This is going to be a philosophical point, which may I'll then relate back to how this affects the customer experience. What they should stop doing is they should stop trying to balance security, reliability, customer safety, and so on the one hand, with delivery of new products, features, services on the other. A lot of banks, when you talk to them, will end up talking about this balance between these two things. They will, and the balance implies that if I push one up, I can only
Yes.
do so by pulling the other down.
Yes.
So I can only release new products and features by doing things that are unsafe and dangerous and will risk customer experience. And I can only safeguard customer experience by slowing down and not giving them new features and so on. And the problem with this balance is that it not only means that because banks are inherently conservative, customer experience is normally the thing that suffers from those two. It also means that the bank is constantly at war with itself, with different departments, because different departments will constantly come down on different sides of this this seesaw, they'll be constantly fighting within themselves. At Starling, we've gotten rid of this balance, or this need for balance, and we've built a system that says both of these things are important. Both, security, reliability, customer safety, and following regulations and so on. That's very important on the one hand, and on the other hand, delivering new products and features and delighting customers with new stuff is important as well. Let's go for both at once. Let's build a system where these two things are mutually reinforcing. They are not contradictory. So we've built up a system using technology and, with the people and the culture and so on within Starling Bank that does both at once. So, and that really helps deliver for customers and deliver the customer experience. So I would say the thing to stop doing is, stop envisioning this as a balance and start envisioning it as a virtuous circle. The other thing, the thing I would say they should start doing is they should start trusting customers with their data. So people like to say data is the new oil. I actually have a different phrase. I say data is the new money. What I mean by that is that a bank holds money on behalf of its customers. Now, a bank is allowed to benefit from money in aggregate. So if we take all the customers' money, put it together in a pile, and then lend it out, where that's how banks operate. So we can do that. But if a customer comes back to us and says, "I would like my money back, please," we have to give them their money, right? That's because it's their money. We're holding it in trust. We think the same way about data. A customer's data is theirs. So we can benefit from data in aggregate, across all customers. We can take all customers' data and look at it in aggregate to spot patterns, trends, both for the purposes of safeguarding customers against, fraud and financial crime and so on, and for the purposes of making, judgments about where we, best go next, what products and services are good and we should release and so on. But if a customer comes to us and says, "I would like my data, please," it's their data.
Yes.
And, regulations such as GDPR, such as PSD2 are, the underlying bedrock idea of them is this idea that a customer's data is their data. So that's what I would say they should start doing.
Great. Actually, the start and stop for me is also around the same things. I would say what banks should stop doing is also to stop trying to do everything by themselves. And that is very well enabled by this ecosystem, open banking, being able to use the services of others, experts. And essentially that's the start, right? Start delegating, start subcontracting, start using other experts for areas that banks are not experts in. And that also deals with the data aspect as well, right? So when you start sharing that data with the customer's consent, of course, then what you can imagine out of that and what you can create out of that is something completely different and something completely unachievable for a single entity. So I think, that's one of the things that, a lot of banks are realizing, that by participating in the ecosystem, they can actually stop doing a lot of things that they have been grudgingly doing over the years.
Yeah. I think it's you're right. It's definitely a case of picking and choosing what you want to do.
Yes.
So and really picking and choosing it. So Starling has picked to be a technology company as well as a bank. We are a company that prides itself on being able to do the technical things. And we have built an incredibly good engineering team in order to do that. And we have put in the hard work in order to build a platform, based on good, solid technology with a good engineering team to maintain and build it. So that sort of thing is, we've gone in on technology and said that is going to be one of our core competencies and have, really taken that on. Other banks might not want to do that, right? They might want to say, we are not a technology shop. We are going to focus on banking and finance. And in that case, you are absolutely right. Then they need to go, well, where do we go, right?
Yes.
We need to get someone else to build our technology for us. Which is where Engine comes in. This is, Starling's idea that maybe, there are banks out there who don't want to become technology shops, who want to focus on banking and want someone else to build their banking platform for them.
Yeah, and even within banking, you can really specialize in the type of banking that you want to do. And even delegate things like, or use the ecosystem for things like, risk calculations or, things like that.
Absolutely. Yeah.
So it's about being able to really focus on one area that a bank really is really passionate about achieving, and being able to now, get the other aspects done by, other organizations.
And this is where the customer data stuff really comes in, because
Exactly.
in order to successfully do that, you need to be able to say to the customer, well, we don't provide service X, but this other, organization who we partnered with or who we know is over here who does provide service X, and the customer needs to be able to easily move over to service X, which often means easily porting their data across to it, so that they don't have to go, right, now I need to fill in another set of forms and do another credit check and do another KYC and that sort of thing.
Loose plot. All right. So, Jason, in a recent panel discussion where you and I were both speaking, you mentioned something like change is risky, but no change is riskier. Something to that effect.
Yes. Yeah.
So I'm actually curious to understand how you go about changing different elements in your customer experience. Like, for example, how often do you change things, and how do you use data to really know what to change, and also to see how effective those changes were? Can you just tell me a little bit about how that's done at Starling?
Okay. Yeah, absolutely. So there are, in terms of using data to see how, well, let's start with the question on changing. How do we do change? We do change fast at Starling. That, I think, is the first thing to say. So we are constantly releasing new code. We're releasing into production dozens of times every working day and so on, but all the changes are very small. So the risk of a change at Starling is we regard as being related to its size. So a very small change, not very risky, carries little inherent risk. Large change with lots of code in it, that's very risky. So we try and shrink our change build window to as small as possible, so that we can release as quickly as possible, and and have that small, nice, non-risky release going out, and so on. In terms of knowing whether a change is good, there's various things that we can monitor. There's the obvious technical stuff, such as, did the release actually happen? Are the systems overheating? Has our CPU overheated and melted through the floor? That sort of thing. It's there's the obvious technical metrics. And then there's more customer outcome based metrics that we can measure. Not only things like, are the customers having a good experience in terms of low errors, but also, are they using such and such a feature? How many times a day is such and such a feature used? Is how long are customers taking to use the feature? Are they using it? They going through it quickly? Are they going through it slowly? Where are the pain points? We've done a lot of this analysis on our onboarding flow. because we've changed it a lot over the years, because it's not everyone only experiences it, once or maybe, 2 or 3 times if they apply for additional accounts. But it's still the first impression you get. So it's still really important to get right. So we have to, really go, well, where are people getting stuck in the flow? What could we do to unstick them? How could we, do that? And that involves us, checking which stages people are at in the flow, how long they take at each stage, and so on and so on. If there are different paths in the flow, who goes down what path, and so on and so on. So all of this sort of monitoring, and sometimes going down to a very granular detail on that level of, which paths are people going down and that sort of thing is very important to try and understand the customer experience. Because obviously you can go and ask a customer, but getting a sort of general impression of all customers is different, right?
Yes. And your product development happens, inherently with this data, using this data all the time? Is that how it works?
Yeah, I mean, we use the data as one of the inputs. The data of how the system is being used. There are obviously others as well, such as is the market in the right place for us to launch such a product, and is it commercially sensible and that sort of thing. I think. Is it commercially sensible? Is actually a question I would emphasize, because a lot of times you get new fintechs, new entrants to the market going, growth is everything. Let's just get the customer numbers up. Then later we can work out how to make money, and that is very dangerous thinking. You need to know how the thing you're going to launch is going to make money from the get-go. You can't just go, let's grow first and work out how it becomes profitable later. That's a bad plan.
We've seen quite a few of those, in the market, especially in the UK as well.
Oh yes, yeah, all over the place. And it's this is not just like a problem for fintech. This is a problem for technology in general.
Stuff, yes.
Yeah, indeed.
You're right. All right, Jason, that was very interesting chatting to you about all these things. And before we wrap up, I want to do something really fun, hopefully fun. I'm going to have a quick fire round. I'm going to say a word, and you're going to tell me the first thing that comes to your mind. Can be a word, can be a sentence, but just the first thing that comes to your mind.
Sure.
All right? Okay, let's go. So the first is open banking.
I'm trying to think of how to phrase this. I have the sort of emotion in my mind, which is disappointment. The reason for that, I will explain, is that open banking was something that the initial thinking behind it was, we're going to create something that will help widen the banking market, right? It was run by the CMA9, Competition and Markets Authority, right? It was designed to make banks easier to transfer between and to get more and more banks. But nowadays, when you go to open banking conferences, all you hear about is, let's challenge the payment rails. Fine, sure, but that's not the original purpose, was it? The original purpose was to lower the market share and thus power of high street banks, and it really hasn't done that to the extent that I'd wish it had.
You have a point. All right, second one, crypto.
Wary, suspicious. Crypto, I am waiting for people to present me with a good use case for it. 99 times out of 100, when I go to see a crypto firm or Web3 or tokenization or anything like that and look at it, all of the things they're advertising, I'm sitting there going, either these are problems you've created for yourself by using blockchain or crypto, or they're problems that you could easily solve with, just a relational database. Like, what are you? Why are you doing this? It's hype and buzzwords for the most point. So I'm sitting there going, I don't understand what this is or why it's useful to, the average everyday consumer.
All right, last one. Are you ready? Socks.
Starling. Starling Bank. So this is an interesting one. When you go to conferences and so on, especially tech conferences, what used to happen usually is you would be handed T-shirts at booths. You know, people go to booths and they would go, "Do you want our T-shirt?" and so on. So I've got a load of T-shirts from tech conferences over the years, and Starling decided, well, instead of handing out T-shirts at our booths, we'll hand out socks instead. You know,
Genius.
and brilliant, fantastic. So we started handing out those, and now, you know, imitation is the sincerest form of flattery. And just as many high street banks have copied a lot of features that
They've copied the socks as well.
Yeah, they've copied the socks as well. Yeah, that's I think that's one of Starling's proudest achievements.
I hope everyone remembers that. If they don't remember anything else from this interview, I hope everyone remembers the sock story. All right, Jason, it was very exciting to have you on this series, and I really enjoyed the insights you gave about how you deal with customer experience at Starling Bank, and I'm sure everyone watching benefited much from this conversation. Thank you very much, and
no worries.
to see everyone else pretty soon.